Hey guys, welcome back to a brand new video. I'm RexFinance, and today we're going to be talking about a $4 stock that I believe is pretty much easy money. And I'll be diving into my spreadsheet, my price target spreadsheet, my valuation spreadsheet towards the end of this video. And based on those numbers, I actually believe this stock is over 700% undervalued currently. Now, I just want to mention really quick, I'm 22 years old now, right? So I'm getting kind of old. I pinched a nerve in my neck lifting weights, so I decided to go visit the chiropractor. It was like the 4th of July for the second time, coming from my back and my spinal cord. It felt amazing. I feel like a brand new man. So take this as a warning, YouTube. I'm feeling better than ever. I'm hitting my second wind, and we're going to have a lot of content come out on this YouTube channel. So make sure if you're not subscribed yet, you hit that subscribe button down below. We've been growing like crazy lately. And I hope that continues. I hope and pray that continues because I love getting to know all you guys. Leave a comment down below just saying hello because I like to see the different usernames in my comment section. I actually included this stock in my 3 high growth stocks to buy in July video that I released on July 6th. And you dirty dogs, ever since I posted that video, the stock is up 20%. I was not done buying this stock, and now you guys have bid it up by 20%. Thank you very much. If you haven't caught on yet, we're going to be talking about Flux Power Holdings, ticker symbol FLUX. This is just a $79 million company, which is crazy, and I'll explain to you why it's crazy in today's video. It's really easy to understand what this company does, because what they do is they produce batteries. They are leading the lithium adoption in the electric vehicle zero emission space. To be more specific, this company is electrifying the material handling sector with lithium-ion batteries, so think forklifts, lift trucks, etc. And more broadly, the company is electrifying commerce. They provide these batteries to the material handling sector, which also includes warehouse robotics, which is a really cool industry trend that has a lot of growth in front of it. The whole material handling sector is a $2.5 billion addressable annual market, so this market is huge, and Flux Power is a main player here. So over the course of many years, this company will be doing hundreds of millions, if not billions of dollars in sales. To add on to this, Flux Power also provides batteries to airlines for their ground support equipment. One of their customers is Delta Airlines, whose ground support equipment is nearly entirely powered with electricity now, thanks to Flux Power. The estimated market size for this industry is over $400 million. This is internal combustion ground support equipment, which can be replaced by electric ground support equipment, and which will be replaced with electric ground support equipment. You can see, even just looking at this simple graph, how much this company is growing. Battery packs shipped over the fiscal years. In 2023, they've already shipped almost 18,000 battery packs. They also provide these battery packs for solar storage and Port Authority equipment. And you can see an entire list of Flux Power's customers here. Arctic Glacier, Frito-Lay, Mondelez, Pepsi, AutoZone, Costco, Procter & Gamble, that's a new customer that they just signed on, Walmart, Caterpillar, Android, Nissan, Subaru, FedEx, US Foods. The list goes on and on and on and on. This is a legitimate company in a legitimate industry that's going to make a lot of money for years and years to come. But most importantly is the financials. Why do I view this as a very low-risk investment with tremendous upside potential? Of course, it all starts with that revenue growth that I've been talking about. But beyond that, this company is on the brink of achieving profitability. I actually expect that when they report their next earnings report, they will have been profitable over this past quarter. But if it's not over this past quarter, there's a 100% chance that they are going to be profitable in the next quarter. And if a company that you invest in is a profitable company, that takes away tremendous risk from your investment. So this is a very unique opportunity, in my opinion, where you have a very low risk investment with a very high potential reward. Let's just talk about the previous quarter. Revenue increased 15% to $15.1 million in Q3 compared to $13.2 million in Q3 2022. This was the 19th consecutive quarter of year-over-year revenue growth. But more importantly, on this channel, we like to look at profitability or future profitability. And the company's gross profit increased 146% to $4.7 million in Q3 2023 compared to just $1.9 million in Q2 of 2022. Gross margin was 31% in Q3 compared to 15% a year ago, and that is an increase of 16% year over year. Adjusted EBITDA loss was down to $3.1 million for the 9 months ended March 31st, compared to $11.9 million over a year ago. All of this revenue and profit growth came while operating expenses, or the OPEX of the company, only increased 5%. And for the quarter, EBITDA loss was only $700,000. So you can quickly see how this company is approaching profitability very, very quickly. And then just one last statistic I want to shout out is for the first 9 months of fiscal 2023, cash used by operations declined by $14.1 million, or 73%. There was a 73% deduction in cash used by operations. This company is becoming more and more efficient as time goes on, and this is going to be a profitability beast over the years. 95% of this company's revenues in the last quarter came from long-term customers, which signals this is a very, very sticky business. Flux Power's customers do not want to switch away from Flux Power. Once they're signed on, they want to stay on. And this is even a bigger deal because the CEO of Flux Power says here in the last earnings call, they are big, meaning the customers. The customers are big. We already covered the customer list. Some huge companies, some of the biggest companies in the world. And he says, the bigger we are, the better we can address and support deliveries and service all over the country. And then here's the kicker. He says that these large companies, these large customers of theirs, want them to expand to Canada and Mexico at some point in the future, taking them international. This is not going to be over the near term, but it's going to be over the long term. Suffice this to say that Flux Power is still in its infancy of growth. You'll see in my spreadsheet that I actually expect the company to continue to grow at 35% plus when it comes to sales for many years to go in the future. And once this company chooses to go international, that's going to be another catalyst for very, very rapid revenue growth for the company. I mean, this company literally just signed on Procter & Gamble as a customer. Think about the revenue opportunity that this company alone provides for Flux Power. It's insane. They say that their current production facility can support up to $150 million in annual revenue. Over the long term, they're going to have to find a second production facility. That is inevitable. But for the time being, this company has a production facility that is actively producing battery packs. In today's day and age, that is a lot to be said. Lots of companies have tried to become battery manufacturing companies and have failed miserably. Having a facility that is fully tooled and producing high quality batteries is no small feat. And if you're still not sold on this always gives me some more peace of mind. The CEO of the company, Ron Dutt, went out on June 14th and purchased shares of the company on the open market. He purchased 2,650 shares for $4.07. Sure, that's not a lot of shares. That's not a ton of money, but the fact the CEO is actively buying shares on the open market when he practically gets shares for free just for being the CEO of the company, that should signal to all of us that the CEO, the guy in charge, the guy that sees everything at this company, believes that this stock is tremendously undervalued. But without further ado, let's go ahead and jump into the spreadsheet. If you want access to this spreadsheet, join my membership down below. It's the cheapest one on YouTube, I'm convinced. And we're giving away free t-shirts right now. Free t-shirts. So who doesn't like free t-shirts? Join the dang membership by hitting the join button down below by the subscribe button, or hit the link in my pinned comment. I would love to see you guys join, and I thank everybody that does. The membership has also been growing like crazy right alongside our subscriber count. So I hope this growth on both facets continues. But at the top of this valuation spreadsheet, I have what Flux Power did in revenue in 2022, which was $42 million. I then included analyst estimations for revenues for 2023 and 2024. This year in 2023, they expect $66,480,000. In 2024, they expect the company to do $82,250,000. I believe that this number for 2024 is lowballing it by quite a bit. According to my estimation, in 2024, I think the company can do at least $90 million in revenue just based on their current backlog, based on their customers based on everything that's surrounding the company right now. I think $82 million is low, so I have $90 million plugged in. And then for 2025, I have the company doing $115 million in revenue. I would not be surprised if that is also low. But for this year in 2023, given the fact that we're already halfway through the year, analysts are probably going to be spot on when it comes to their estimation for revenues for this company. So I just dropped the $66,480,000 into my expectations as well. Based on my calculations, I have the company doing a total gross profit of $22 million essentially this year in 2023, $40.5 million in 2024, and $57.5 million in 2025. You can see how the overall profitability of the company is just going to skyrocket over time. This represents 200% gross profit growth from 2022 in 2023, 85% in 2024 year over year, and 42% year over year in 2025. And since this company is achieving profitability, I have a corporate tax rate of 21%. This will be high over time, especially as the company goes international into Canada and Mexico. But you can see I have the company bringing in $741,000 of net income this year in 2023, which represents 4 cents of earnings per share. I then have the company's net income growing to $12.245 million in 2024 and then $22.5 million in 2025. So by 2025, I expect the company to be doing well over $1 of earnings per share. And I've completed 2 different valuation methodologies here. One is the price to sales valuation, one's the PE valuation. Both of these are based on multiples. Price to sales obviously doesn't take into consideration the profitability of a company, but I usually like to include this at least for 1 year, especially since the company's not going to be extremely profitable this year. It's better to use a price to sales valuation for unprofitable companies, and it's better to use a price to earnings valuation for profitable companies. Over time, this company really hasn't diluted shareholders, which is another bonus as a shareholder. The company's not selling additional shares into the open markets. I love to see it, but for simplicity's sake, for safety, I have considered a 5% assumed recurring share dilution every single year. So currently there are 16.3 million shares outstanding. By 2025, I have that there will be 18.88 million shares outstanding. And my PE multiples might seem high and might seem low to some people, so I think it's going to be right in a sweet spot. My multiples are 35, 40, and 45 because this is a company that is growing at 35% plus when it comes to revenues and is growing profits and income every single year for years to come now, very, very quickly. And whenever you have a company that's set to grow tremendously like that, they deserve a higher PE ratio because you're paying for all future cash flows of the company. Anyways, based on 2023's numbers, I believe the fair value of the company is $19.61. Currently, this is a $4.90 stock, so you can see how undervalued I believe it is even for this year in 2023. Based on 2024's numbers, if they execute, I believe that the fair value is $26.55. 2025, I believe the fair value is $39.08. I am not a day trader or a swing trader. I invest in companies for 3 to 5 to 10 years plus. So I'm going to be holding on to the stock until 2025 unless something dramatic changes with the business fundamentals. And because of that, I believe the company is 697% undervalued. I believe the fair value of the company is $39.08 because I'm going to be holding until 2025. But again, if you don't like my numbers, download the spreadsheet by joining my membership, change my multiples, change my revenue estimations to what you think is more appropriate. It's really, really simple. That's just one of many, many benefits that I provide for my members. Again, we're giving away free t-shirts. Who doesn't like free t-shirts? Join the dang membership. It makes you really, really cool, I heard. But with that, I'm going to end this video here. Thank you guys all for watching. Keep 10 toes to the ground. Keep your chin up. Stay blessed. Peace out.